I am SoCar. This is Investing with SoCar. No, I don't think I like it. I don't think I'll be opening with that ever again. I'm sorry for that. I figured I'd give it a shot. It does not sound right. No, there's definitely something wrong with that. At any rate, so we have a couple of things to look at today, and some of these are going to be actually pretty cool. First, we're going to go to our week right here. This is my investing account. So 237 is my break even here, and when my paycheck clears, I'm going to drop another 70 in here, because that's the 10%. You got to pay yourself first. It's the first law of gold in virtually every book about making money, but especially in Richest Man in Babylon, which super awesome. I highly recommend people get and listen to, or get and read, whichever you prefer. But anyway, when I add that 70, it will show this baseline as being 307.55, which I think is really cool. Not all places will do that, so it'll show an investment as a big bump up like this. I'm pretty sure E-Trade does that. And then a withdrawal will just drop it. It shows your actual balance, whereas this shows the balance as modified by recent deposits, which I think is really cool. So we got a couple of things. We are going to get to look at this position right here. Where's it at? Oh, my positions are over here on the computer. So this is the butterfly that we put on, and I'm pretty sure I did a video on this. If not, I put on a butterfly. I went out to November. Remember, the 5th of November, which ironically is the day that everybody votes for presidential stuff this year, for the CEO of the corporation that is the United States. If you don't believe me, look up Dun & Bradstreet. It's hugely entertaining. Anyway, so this is a butterfly for after the elections, because something's going to happen. They're going to vote in Party A and the market is going to plummet, or they're going to vote in Party B and the market's going to take off, because that's what happens every election. Don't care what side of the fence you're on. You're welcome to believe whatever you want to believe. I care about the market. That's what we're here for, is the market. So I got the butterfly. Let's go ahead and say simulate my return, see where I'm at right now. Oh, look at that. There's opportunity for profit out here. But you'll see it's in November. So I got this one. It's on the SPY, and obviously we're in Robinhood. We're actually going to take a look at my Tasty account here in a little bit, but we're in Robinhood, and this expires on November 29th. Most of the other places that I was looking at, like I was going to potentially pick up a butterfly on SLV, and that would have been November 15th. I think that's where that would have been, was there. And so the projection here is, if it doesn't change, it's SPY is currently trading at 555. It's been a down day today. What is today? Today is Wednesday. So for me, it's August 28th, and I'll probably get this video posted tonight. So it'll probably still be today, depending on how far in the future you future people are. Obviously, it won't be today anymore. But anyway. So that's what the position looks like. If it doesn't move out of here, I'll be able to claim a decent chunk of change here when it expires. It won't be max profit unless it's right around, where are my spreads? Let's come back. Review order. Does that? Oh no, this is going to be for closing. We don't want to close it. We just want to see what we got here. I know it shows me somewhere total return, average cost. Got in for 8 cents, which of course is $8. SPY beer. Oh, okay. So it's a $2 spread. Oh yeah. So when I got into this, I was lucky, and when I looked at it, it had $1 increments. Whereas when I looked at it again later, because I was going to put on another one just for fun. I mean, it's $8. It's whatever. It's like I'm playing roulette. When I went to go put on another one, it was a $5 spread. And when I looked up the QQQ to put one on that, remember that's the NASDAQ, or rather an ETF that tracks the NASDAQ, That one didn't have November 29th. It did have November 15th, but it was a $5 spread. So it was harder to fill. And on Friday, I was sitting on an order the entire day waiting for it to fill. I even modified the price a couple of times, didn't quite fill. So one of the things that we're looking at today is liquidity. When we are this far out, this expiration date is November 29th. It's still 3 months out from today, 3 months from tomorrow, actually. So there are fewer people trading it that far out. So one of the things that you have as a downside is the liquidity. There aren't as many people trading, so it's harder to get into a position, but it's also harder to get out of a position. So let's bump this back to a week. Looks like August 22nd. Is that when I got it? Let's find out. Back up. Oh no, that's the strategy. That's not my position in it. All right, let's go back. Let's go investing. Here we are. I want this. Let's go 1 week, 1 month. Is that? Yeah, again, that's the actual position, not my position, or rather, that's this spread. So I got into this. Bink. Oh yeah, we're going to talk about that little spike right there. I got into this last week, and either Wednesday or Thursday. I've been on it for a few days. So here's my investing profile today. Let's bump this out to 1 week. This spike right here. So we got 234, which means I'm down basically $4. 237.55, 231.34, 234.34. It's about $4. I'm down $4 here from here. So last week and this week. This little spike right here, bink, 278. What? That was up $40. So let's look at why. Now, if I would have been able to cash it out immediately right there at exactly 7 a.m., and if there was someone on the other side waiting to buy what I was selling and to sell what I was buying, then I could have cashed in that $40 profit, which at this point was entirely that butterfly that we're looking at. And there was a similar spike, but it's hidden now because it was at 7:30. So the spike actually would have been like right here somewhere, not nearly as big. It was not a $40 jump. So let's take a look here. It's August 27th, 7 a.m. So let's go check out the SPY. That's the strategy. That's not what we care about. We care about the SPY itself. What? Where's? All right, let's go back. Go here. There's my SPY. Cool. So I already forgot what day it was. It was 2 days ago. It was the 26th. Okay, so 26th. Well, that's just today. Let's go back to a week. 11 a.m. 7 a.m. So it was at 7. Oh yeah, right there. Right at 7 a.m. is where it shows on the chart. I think it was actually at 7:30. So right in here somewhere is where that profit spike is. And the reason that profit spike is there is because it drifted right through the spread, right where my peak is. Because it drifted through there was that spike in value. With your butterflies, especially if you're trading that far out, your butterflies kind of is like playing roulette because you're getting in for basically nothing. I spent $8 to get in that position. 8 cents, $8. So it was basically free to get in, and the profit potential on that one, because it's a $2 spread, my max profit on it was $192 because a $2 spread, $2 per share of 100 shares is $200 minus the $8 that I paid. My max profit is like $192. But if I am in a position where I see that max profit of like $50, take it. Why not? You'll never go broke when you're taking profit. But we might write it out. Let's see. So today I put on a couple of trades, and they were both credit spreads. And I put one on the SPY, and this expires on Friday, so it's not a long-term one by any means. I'm selling this one. So what I did is I looked at the SPY, and this is the value of the call. Let's see what I got into it. It's currently trading at 31 cents. I took a credit of 42 cents. So I sold this for 42 cents. It's currently trading at 31 cents. So if I close my position on this and it fills at 31, I will have made that 11-cent difference, or 11 bucks. So I actually collected this 42 cents already, the $42. And then when I close out my position, if I close it out as opposed to writing it out through Friday, when it expires, then I would be paying this back out. So that would leave me with a net of 11 cents. So $11, because 11 cents per share times 100 shares, 11 bucks. Okay. And I got into this right at open or near open. Does it list my time? It probably does. Under... It might show under the account. I don't necessarily want to be showing all my account information though. So, and because I don't know what actually shows, we're gonna skip that. Does that show? Oh, there we go. So yeah, a little before 7 a.m. What I did was I looked at the SPY and I decided that so just before 7 a.m. So this is today. It's a one-day chart. 7 a.m. is right in here. So I submitted like right exactly there. But 7:05, somewhere in here, I looked at this chart here. I pulled out and I looked at the weekly chart. And I checked my advanced stuff up here. Mostly I was looking at the VWAP, and the VWAP is this one right here, or is that one? It's that one. 558. Yeah, that's the VWAP. That's the VWAP right there. So, and it was trading below here when I first looked at it. So let's see here, 705, right in this area here. It was bouncing around it a little bit, but it was primarily under it. So I decided that I was going to go ahead and short the market. I was going to short the SPY, and that's why I sold a credit spread. Because if you are bearish, which means I expect this market to come down, I want to sell a credit spread somewhere above here. So what we did was I went out to the week and I picked, okay, so here's the week. I looked into this area right in here and I went to one of the recent highs and I sold this at 563, 564. So right here, I don't start to lose money on this position unless it comes all the way back up to test in this level right here. So as long as it stays below that level until close on Friday, so in a day and a half, we're going to see profit on this. And in fact, if it stays below 563, we're going to see max profit on it. So let's take a look at the visualize my, what do we call that? That's the spider. Let's go back to investing here. And I'm starting to get more familiar with everything because it's different on the phone than it is on the computer, and I'm getting a little better about remembering where I want to click now. Okay, so I want to go into here. We're looking at the SPY, the 563, 564. So what I did was I sold, let's go back one more time so we can look at it. A credit spread means that I collected money on it. This is a debit spread. I paid money for this. I paid 8 cents. It's currently trading at 5-ish. So my position here is down a little bit, but that's the butterfly. This is a credit spread. That means I collected 42 cents. And so I sold this 563 call option, and I bought the 564 call option. And that's so that I can cover this call. So as long as the price stays below that 563, I'm not going to lose anything. So now we can click here. And then we'll say visualize, simulate my returns. And I'm in the profit right now, which we talked about. I'm about $11 up. If I were to close my position right now, it would be worth, I would end up keeping about 11 of the $42 that I closed out at. And this max profit here, of course, you can see in the this area here that it's $42. So it says I'm up 21 right now, but I'm not. I think it's only 11. But this might be assuming that I sell it at the last traded, whereas I was looking at it when it wasn't. I don't know. So I'm going to make some money. Provided it stays at this price right here, I could close out my position anytime after about 9:45 or 10 in the morning-ish on Friday, and maintain my last profit or my max profit, or I can just sit on it and let everything expire, which is the easier thing to do, and then I'm not spending 6 cents, and that's not 6 cents per share, it's actually just 6 cents in my regulatory fees and such. So we're probably gonna let this expire, but if it stays anywhere below 563, the chart will look similar. As it gets closer to 563, instead of being right here, max profit, it's going to get closer to right here, and it might be a really sharp curve right here if it gets really close. But as long as it stays below the 563, my max profit is going to be that $42. So I liked it, and I thought about putting on another one, and I was like, well, wait a minute. There's the QQQ. So I pulled up that chart, and I looked at that one, and it was pretty solidly in a downtrend as well. I looked at the 1-day chart, which is right here, and it was closer to like 11 o'clock, I think, and we'll double check the time. But good solid downtrend here, good solid downtrend on that 1 week chart. It's a good solid downtrend on the 1 month, on the 3 month, and on the daily. Now it would have been. Oh, you know what? I think I got it right here, right before noon. Let's go look at it, because it's really funny, because exactly when I bought it, this is my investment account. Oh, right here. Yeah, I got it right there at 11.50, which is what I was just saying. Right here is where my profit was. I was sitting at 253, which means I was up around $20 for the day. That's 10% of my account. That's not bad, especially because it's two option spreads at that point. It's the butterfly here, and then that SPY call spread there. So I got into this one right at 11.50, and the second that I did, you see it just dropped 253 all the way down. I lost down to 237. So my value dropped by like 16 bucks. Just immediately afterwards. And the reason for that is, let's go ahead and click on our QQQ here. So 11.50, right there. That's when I bought it. It immediately just skyrocketed. And it's really not a skyrocket. It's $3, but $3 is a pretty sizable jump on a $470 account. So to go $3 in a few minutes, that's pretty impressive. I wasn't nervous. I sold the spread again up in this area up here somewhere. Where did I sell it? 475, 476. So I need the QQQ to stay below 475, and then I'll close out at my max profit. And I sold this one at 41 cents. Oh no, I'm sorry, that's what it's trading at. I sold that one at, I only got 35 cents on that one. So the other one's worth potentially 42, and this is worth potentially 35. So let's go ahead and simulate my returns here. Just like before, it shows that I'm in the profit right now, only $7. And then sometime, this is a little later because I'm a little farther away from my target, but around 11 a.m. ish, somewhere in there, I would be able to close out the position with max profit. And we'll probably ride both of these right out to expiration because, why not? We probably will. And of course, we'll manage the account if we need to in order to look at those things. So that's where we're at. That's why our balance looks like this. So for the day, our $234 balance there is at 239. We made $5. Nice. That's not bad. I forget exactly what the percentage was on that. I don't think I screenshotted it either. But you'll see the buying power here is at 106. So I could take on another one of those positions. In fact, I could take on 2 more of those positions because I got into that one for around $40. I got into this one. I'm sorry, I sold for 40 and I sold for 30. But I could do a debit spread of something else if I wanted. Now, when I put on this position, let's take a look at this one. I sold this for a 42-cent credit. Now, the worst case scenario, my maximum loss is $58. And that's because it's a $1 spread. I have my spots here, my strike prices are $5.63 to $5.64. There's a difference of that $1. After it goes above $5.64, if it were to do that, then for every dollar I'm losing on one, I'm making $1 on the other. It nullifies. It doesn't matter. That's my maximum my maximum loss if it goes up to that point. And because that's a dollar spread, it's a dollar per share for 100 shares. It's $100 minus the 42 that I collected, means that I have a maximum loss of $58. So essentially I'm risking 58 to get the 42, but for various reasons I'm very confident that we'll be collecting probably all 42 of that. But we'll manage it if we need to, so we'll keep an eye on it. Today's return I made $11, and yeah, we looked at that. We already know that. So there's our positions. But because my maximum loss here is $58, I have to put up collateral for that, which is going to be a cash collateral. And all that means is that they're going to put a hold on $58 of my cash. So my account has $239 in it. Yay for small accounts. But I only have 106 that I'm able to do things with. And that's because they put that hold on that $58 on that one, and I think 65 on that one. Because I'm pretty sure I sold that one at 35. I sold that one at 30 something. So if it was 35, my max loss is 65. They would have put a $65 hold on this money over here, on my actual money, just in case the market goes against me and I lose that money. So that's why our buying power here is only $106. So that essentially wraps up the Robinhood account. We are going to take a look at my Tasty Trade account, and I've got it open, but I'm only sharing the web page, so I think we'll come into their web version. Tasty Works, login, and of course we should probably pause this for a moment. All right, we're signed in. Pretty sure there's nothing that's revealing necessarily, nothing that should allow people to steal my identity or anything like that. So this account is an even smaller account, and that's because I had some trading going on. I cashed it out. I'm pretty sure this is the account that I cashed out when I blew a rod through my engine in my Lexus, but I don't remember for sure. I think that's what the case was. But anyway, it's got like $60 in there. Our net liquidity is 55. The cash shows as 71, so it's possible that's what we have currently. So what I did is this is an actual futures contract, whereas Robinhood, I'm in the SPY. I'm in QQQ. So this tracks the NASDAQ, but it isn't the NASDAQ. This is the SPY. It tracks the S&P 500, but it isn't the S&P 500. To give you an idea, the SPY is trading at 555.64, whereas the underlying asset, the actual S&P 500, is trading at 558. So it's not exactly one-to-one, but I wanted to get into a similar trade here on Tasty Trade because I don't have very much money in the account, but this is going to be one of the accounts that we're going to put money into when I have the investment, when we get the investment seed going. So we'll probably split it between here and AMP Futures, and I'll probably do my trading on Trading View using AMP Futures, and then of course Tasty Trade. That's probably what we'll end up doing. I haven't decided yet, but that's what we're looking at. So I have this position. I accidentally got into this position backwards. So the -1 means I'm selling. The +1 means that I'm buying. So this is a credit spread, just like in SPY, and I put it at approximately the same points, meaning that my strike prices in my SPY position here are 563. That's the one that I sold, and I bought at 564. And these ones expire Friday, whereas Tasty Works, these expire either Tuesday or Wednesday. September 4th, they expire Wednesday. So I'm selling at 563. It's actually at 56.30. And then I bought at 56.40, which is 564, basically. So I'm selling and buying at the same points. Now, this is the micro S&P 500 contract. What that means is this pays $5 per point that it moves. Now, when you get into futures, which is the commodities, it's your foreign exchange that everybody loves, it's the interest rates that I personally have never traded ever, but a lot of people love them. They love those interest rates. Things like that are your futures contracts. And of course, the indexes themselves, the indices, the S&P 500, the NASDAQ 100, so on and so forth, Dow Jones, which used to be the famous one, all of those are indexes, and they're trading futures contracts, and they trade a little complicatedly, and we'll get into that when I start doing the futures trading, and we'll do that. I'll make a separate playlist. It's still going to be in this channel because this channel is focused on my trading stuff, sharing my knowledge and sharing my experience, and my experience is what matters because that's what teaches us best. And even if you were to watch every video I put out between now and a few years from now and watch everything 900 times, it really won't be as good as your own experience. So trading something is good, and I like that I'm able to start with a small account, and $200 really is a tiny account, and do something because it shows that we can get experience without losing a lot of money. Like I had a couple of lost trades on this account here, and I'm overall at this point here I was down $7. That's about the biggest drawdown at the moment. My balance was $241, so right now I'm effectively down $2, and that's it. So it's not costing me a lot of money to get actual experience, and I definitely would encourage any new traders to start trading something, and trading options is a good way to do that because it's a very defined risk. It's defined profit. You're not going to get lucky and roll a $100,000 trade or anything like that because you're locking in your profits, but you're also limiting your loss. So, and of course, I don't give financial advice. All the information that I provide is for educational purposes only. Blah 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 blah. Disclaimer. I got to work on that so I can do an intro to these videos with the disclaimer. But I put this position on. I accidentally did it backwards. I think I may have lost like $20 on it, but my profit and loss suggests I only lost $8 on it, and it's because I put a bearish position on it because I want the market to come down. It's the exact same position as I have on the SPY on Robinhood. But I accidentally put in a debit spread instead, meaning that I wanted the market to come up, and of course it didn't. It's moving down, and so it was moving against me, and it took me a minute to figure out how to close that position out because I hadn't done it on the phone. I'm familiar with the Tasty Trade platform. I've traded on it before. I've made thousands of dollars in this account right here, but it's been a couple of years, and I didn't do it on the phone. I did it on the computer almost exclusively, so it took me a minute to figure it out. I thought I was down $20, but apparently not, because this position here, which is basically mirroring my Robinhood, is currently up $6, and my profit year to date, I'm down $2, which is just the two trades that I put in today. So that means that I probably lost about $8 on that trade because I accidentally went the wrong direction. And it would have been really cool if I were recording that, because then all you guys that are watching this could laugh at me and leave little comments like, haha dummy, look what you did. It would be lots of fun. So one of the reasons that I really want to have options here though is because if this, whoops, I clicked into a different window. If this trade right here were to have gone against me today, like there was this awesome rally and SPY just skyrocketed to $9 million a share, I could have closed out my position, but that would have been one of my flagged trades, my day trades, because you open and close a position on the same day. They flag you, and you're allowed to have 3 in a rolling 5-day period, 5 trading days, not 5 calendar days, without any penalty. If you hit the 4th day trade without having $25,000 in your account, which I don't, then they'll lock your account, and you got to wait a few days And then after that, would you stop? I know. Yeah, we got roommates. And then you'll be able to trade again. But when you're trading options on futures contracts, you're not subject to the day trading rule. You can get in and out of these accounts all you want. So when I accidentally placed that backwards trade today, I got back out of that trade today. And I don't have to worry about that counting as one of my 4 or one of my 3 for the week, the rolling 5-day period. So getting into the actual futures contracts is a great idea. Again, the whole this isn't financial advice thing. It's for educational purposes. But for my trading style, I want to be able to get in and say, oops, I did that backwards, and then close my position minutes later, like I did today, without having to worry about a pattern day trading thing. So at any rate, this is this little position that I've got here. The forward slash generally will mean, this is the symbol. The forward slash means that it's a futures contract. The ES is the S&P 500. The normal S&P, so forward slash ES, is $50 per point. This is the micro, the MES, and it's $5 per point. So if the market moves 1 point in my favor, I made $5. If it moves 1 point against me, I lost $5. So it's not a huge thing. It's a good idea to trade small in the micros when you're first developing that experience, because on your losses, you're losing significantly less money. You're making less money, obviously, but you're losing less. So this is an equivalent position to my 563, 564 that I've got on my SPY and Robinhood. But because Robinhood, that is shares of stock in an ETF, an exchange traded fund, and each option covers 100 shares, that's a multiplier of 100. So if it moves $1, that's $100 effectively. Whereas this, well, that's only 10 points between 56.30 and 56.40. So if the market moves against me and shoots up through this, I'm not out $100. I'm out 50, because that's only 10 points and the multiplier is 5 per point. So if I'm out 10 points, then I'm out $50. 10 times 5 is 50. So because that spread is 50, what did I sell this for? I don't know. Let's see here. No. Positions. This is my position. There it is. Profit and loss. Oh, I'm only at 583 now instead of 602. I don't remember what I sold this at. History. Haha. So here we are. There's a couple of canceled ones in here too. But one of these will be the one that I got into backwards. Probably this one right here. Bought one, sold one, 809. Was it that early? Man, I thought it was later. That's probably what it was. Paid $1.50 commission, so it cost me $3. It cost me $4 to get into, and then another $4 to get out of that trade. So it will eat into your profits there, especially if you're trading the options on the micros like I am. I mean, my max profit is well, I don't know, because I don't know what I sold it for. I'd have to figure it out. But assuming it were what I got here, $42, then getting into and then out of that is going to cost me $4 in, $4 out. That's $8. So instead of a max profit of 42, now I have a max profit of 34. It's a noticeable difference. But when you're trading the futures contracts, like if this were just the forward slash ES and that's $50 per point, I mean, who cares at $8? If you're in this for 10 points, that's $500. Minus 8 is 492. It's not a significant thing. It's not a heavy percentage. But with options and the micro contracts and option spreads that are tight like this one, $8 makes a big difference. So when you decide that you would love to come trade options on futures platforms, futures contracts, keep that in mind. Robinhood doesn't charge a commission virtually everyone else does, especially if you are on a platform that is trading options on futures contracts, because this is directly the futures contract. It's not going through an ETF. But there's our position. We're going to be spending a lot of time in Tasty Trade when we get into the actual futures contracts. And actually, let's take a look at the chart. We want to see. Yep. Is it loading? It is. Okay. So as we saw, I was working with this around 8 a.m. Why is it not floating with me? What time? What's the time? That's 7 a.m. That's the 27th. That's the 28th. So this is today. Okay, so that's today. I should probably change my... That's not what I want. Where's my time frame? Oh, right there. Okay, so instead of the 1 hour, let's take a look at 15 minutes. Is it still updating? There it goes. Oh, wow. Yeah, okay. Let's zoom that a little bit. All right, so this here's 8:28. So this is today. So 8 a.m. would have been right in this area here somewhere. So if I had the ability, I would have shorted this contract. As opposed to just selling a credit spread of options, I would have shorted this contract. Now, I would not be in the contract all the way down to here. Honestly, I would have gotten out probably right in here somewhere. Where's my time? I'm used to charts that will hover. Oh, there it is. Okay, the time is listed right here, it looks like. Maybe. Yeah, that's probably it. So, let's see. I would have been out by, for sure, by 2 o'clock. So 2 o'clock is this candle right here. So realistically, I probably would have bailed right in here. So I wouldn't still be in it. If I would have got the contract and just sat on it until down in here, I'd be up more money, but I don't want to do that. I want to get out of that contract before the end of the day. And actually, the normal trading day is at 1, so it would have been this candle right in here. So sometime 12:45 to here, I would have been in the market during this plummet, making again $5 per point, and this is a huge drop. That's almost a 30-point drop. It's from 10 down to 80-ish. So 30-point drop, that's worth $600. That's a $600 candle right there. But because I wouldn't want to carry the contract overnight, I would have gotten out of it sometime prior to here. So I would have ridden it right up until nearly 1 p.m., which is when the normal market hours are. You can see it's still trading right now. But when you carry a contract past normal hours, it's got a higher margin requirement. It's instead of the initial, or the maintenance, that becomes your full margin, and that's when you carry a contract overnight. So I would have got exited at a pretty good time because it would have been in this candle. So because it closed right there, I would have gotten out of that account somewhere right in that area, which would be nice if we could see that just a little better. Let's put this candle right over here. So around 55.80, and because we would have gotten into it, we did get into it during this candle right here. So realistically, let's just say 56.40. So had I had the opportunity, if the account were funded already, if I had the few thousand that we're putting into this today, that would have been a solid 40-point move. 40 points at $5 a point is Merry Christmas. Why am I not able to do math right now? 40 points, $5, a couple $100. That's not a $600 candle. That's not 30 points. Wait, what? 55.80. Oh, I'm doing. Oh, 56.40. Yeah, that was a lot. Okay, so that's not a $40. That's not 40 points. That's 20. That's 60 points. Okay, so 60 points. Let's verify. 60 times 5 is 300. Okay, yeah, there we go. $300. So this is not a $600 candle, that's a $150 candle. But this should have been a $300 day. I just didn't have the option of doing that because my account is not properly funded yet. But hey, it's cool. We've got the credit spread. It's up here in this area right here is where the credit spread is. So we would want the price to stay below this point right here. And again, this is trading a little higher than the SPY equivalent because SPY is trading at 555 right now, which makes me very safe. That can come up $7.70 before I start to lose anything on it. Whereas this is trading at 558 essentially. It's pretty close. It's bouncing up and down. So around 558, whereas over here it's trading at basically 555. So this one, after I would have gotten out during this candle, it made me a little nervous, like in this area here, because I do still have that option. I've got the credit spread here, my call spreads. So it got a little close there in this area. I really don't think it's anything I need to worry about. But this one expires next Wednesday, so we're going to keep an eye on this. We'll come back and look at it. It is still options, so we are going to keep it in this, and it's also still a small account because I mean, I've got like what, $70. I had 63 or 66 this morning is how much money was in the account. Super tiny account. So we'll keep an eye on it. We'll keep it in this playlist. There's the update for what we've been doing the past couple of days, and then tomorrow's Thursday. The following day is Friday. These two credit spread, credit spreads expire on Friday. So provided this one here stays below 563 and this one stays below 475, we're going to close all that out at maximum profit. It's going to be fun, and we will give updates by Friday anyway. If I close out either of these positions or if I close this one out prior to then, I'll of course do an update video for that. And then of course if I do any trading while I'm at home as opposed to at work, we will also update. We'll do a video that way too. So it's looking like the average video length for this playlist is going to be something between 30 and 40 minutes probably, because I'm not going to go through and do a bunch of editing. We're gonna stick with the long takes for now. If I'm doing some kind of an educational thing where I'm walking through an example of a butterfly or an iron condor or something along those lines, then I might do editing for that, and those will probably be a little shorter because I'm not talking through my thought process on everything. But thanks for dropping by. Remember to drop me a like and kick me a sub. I appreciate those things. And then we will see you in a day or two. For sure in a couple of days. I'll have another video by the weekend because two of those three option spreads there expire on Friday, day after tomorrow. So for sure we're gonna talk about how these turned out, and I might actually start picking up more of these on a semi-regular basis. So trades, probably sell spreads. If I'm bearish, I'll sell the credit spread calls. If I'm bullish, I'll sell the credit spread puts. Just a little out of the money. I'll talk about where I'm placing them, like with the SPY. I showed the value by looking at the 1 week and picking my spot essentially right here. Yeah, well, exactly right there. So this is my level that I sold at. I expect it to stay below that level, and if you were to draw a line across here as a resistance line, that's a pretty solid resistance. I also have the added benefit of that's basically the all-time high. So if not, it's right next to it. So there's that as well, but that's where I chose my spread, and that has a pretty good probability of not being in the money at expiration. And when you're selling options, that's what you want. You want those options to expire worthless so that you can just keep all of your money. But we'll come back. We'll talk again later. Hopefully I'll see you then, and you enjoy the remainder of your day.